Let's find out what's going on with Utkarsh Small Finance Bank. Govind Singh, the MD and CEO, is now joining in to talk a little bit more about the strong quarterly numbers gone by. Thank you so much for taking time out. To begin with, let's focus on your net interest margins because there's been a sharp uptick, 50 basis points on a sequential basis at a time when we're seeing pressure for a lot of the banks. So what's differentiating you? What made you post these numbers?
Yeah, thank you for having me here. So as far as the NIM is concerned, in fact, we had guided also there will be improvement in our NIM when we talk about the quarter 2 results. So this is generally one is that we are able to pass on the cost, and there was some increase in the rate of advances, and we see at least 20 basis point plus in our retail advances, and 50 to 60 basis point improvement in the micro banking advances. So this is generally, our cost of deposit has not gone significantly. It has gone up by around 10, 12 basis point only, whereas the advances we could gain much better, increase this time. So this is a result of this. But having said so, I think on an annual basis, we expect it will be in the range of 9.5 or so for this financial year, the way we had indicated earlier also.
Fair enough. That's the projection when it comes to your net interest margins. Now, Mr. Singh, your advances growth as well was benign this quarter. But what about your deposit growth? Because there is now more competition this quarter. Do you think that there's a challenge when it comes to your deposit growth? What are you penciling in?
So if we see our deposit growth is in line with our requirements. So we used to have a huge surplus, liquidity surplus, and it used to be in excess of 2,000 crore till quarter 1. So it was a conscious call to reduce our deposit, not deposit, but liquidity, overall liquidity. We have brought it down by around 700 to 800 crore. And if you see the composition of our deposits also, around 46% growth in the retail term deposit during last 1 year, YOY. Whereas the wholesale term deposit had actually gone down by around 6 to 8% during this same period. So there is a shift in the composition of this deposit. It's in largely retail now. And still, in spite of this, our liquidity position is very, very good, and we are always a net lender in market. In fact, we have got significant amount from the refinance also, which is always a long term money. So there's no pressure on deposit per se. I think it was more to ensure that we don't have very high liquidity, because that becomes your idle money, and there is a loss of carrying and holding cost of that liquidity. So going forward, you'll see that because we are, drawing very limited amount of refinance now, that has also gone down the way WDT has happened. So you'll see a good, offtake in deposits also. For this year, I think we should be in the range of say around 27, 28, 29% overall deposit growth on Y basis when you look at March 24.
Good morning, Mr. Singh. This is Winnie joining in the conversation as well. And, I just want to understand, because now many banks are also increasing in terms of the deposit rates to support the CASA. Do you think you will be doing the same as well? Will you be following the same? And can we expect an uptick then in terms of the cost of funds, and thereby some bit of a pressure on the NIMs is just what I want to understand.
So broadly speaking, we don't expect any major increase in our deposit rates. I mean, 5-10 basis point here and there can always happen because of sometimes you have to adjust for the market. But we don't see any significant increase or change in our market, the deposit rates. What is going to happen, and that's what we told last time also, we can expect around 10-12% increase in deposits from here also in quarter 4, mainly on account of repricing of the deposits. So typically our deposits are from 18 months, 24 months time, and almost 80% of deposits have already got repriced. So whatever was the cost increase because of deposit repricing had already happened. But still, some room for that is there, and that's why there may be around 10 to 12% increase in the deposit cost from here, maybe from 7.9 or so. The cost might be around 8% or so. So it won't go beyond that for sure. And overall rates, we don't intend to increase from here.
Okay, fair enough. Let's also get in a sense as to what the outlook is then when it comes to, your profitability, because there have been some fresh slippages this quarter. NPA ratios have inched up a little, though they're still at comfortable levels. Is there any challenges down the line when it comes to your asset quality?
So yes, we had some issue in the month of, towards the end of October and in the month of November. There are many holidays. And sometime in microfinance and retail lending, that causes little challenge because you get less number of days to work. So, but we have seen significant improvement towards the end of December, and in the month of January also, we are seeing a good improvement. So overall for the quarter 4, we expect this will come down, this 136 crore slippages in quarter 3 should come down in the range of what it was for quarter 1. Say in the range of around 100 odd crore will be our slippages. Slippages will be certainly much lower for quarter 4. And overall, our endeavor is to go towards 2% overall credit cost in medium term. For quarter 4 also, again, we expect in the same range for the quarter as a period should be in that range. And we are seeing a much improved collections also across, and the collection ratio should go up from the previous time at least by 50 to 75 basis point during quarter 4. So overall, there will be improvement across, in fact, microfinance, our wheels business, MSME business, and home loan businesses in terms of credit cost also. If you look at the guidance, I think we expect our deposits to grow in the range of, as I mentioned, for the year around 27, 28 to 30% range. Advances will certainly be more than 30% growth for this financial year. NIM, as I mentioned, we expect in the range of 9.4, 9.5%. And if you look at the profitability part, ROE should be in the range of 18% plus for sure, as we have guided in past also. This year as well in the medium run, we expect it should be upward of 18% only. The last one, I think I want to also mention about the cost income ratio. You must have seen it is in the range of around close to very 55%, 54.5 to 55.5%. And our expectation is that this is among the better one in the industry, and this will remain the same range. It will not go up from here for sure.
Okay, thank you so much, Mr. Singh, for joining in with us this morning on ET Now, giving us an understanding in terms of the company. What should we be expecting going forward as well from the bank? Thank you so much for joining in with us. Yes.